I'm going to start it off. Let me share my screen. Okay. So which screen can you guys see? You see my Word document, right?
Yeah.
Yes.
Okay, great. Okay, so I usually like to start these off by taking and writing down what you're hoping to learn, but I might not cover what you want to learn, but I'm always curious to see what you want to learn about technical analysis. So go ahead and call it out and I'll write it down. Anyone can start. What do you want to learn about technical analysis?
So what would be the best leading and the best lagging indicator to use?
Oh, that's a good way of saying it. Okay. But
Javed, I think few months back you showed your Think or Swim screen, and I think you had that channels indicator. I think maybe you might have custom created or what, but if you can talk more about it, which shows basically upper channel as well as lower channel. So yeah.
okay.
Hi, Javed.
Hi.
Hi, is this like open-ended, like anything, or you have to limit it to some topic?
It's going to be the topics I want to talk about, but I'm always curious to see what everybody's wants to learn about.
Yeah, I'm interested in this one thing, and I don't know if it's okay to do it now, is Thinkorswim automated trading. I don't know if you know anything. Is there such a thing in Thinkorswim, automated trading? I'm curious to learn, but you don't have to cover it today because I don't know if that's what this meeting is about or not. But I just thought I'd throw it out there.
No, it's a good point. People have brought it up. I know nothing about it.
Okay.
There are some people who do, but they've had trouble with it. The constant theme has been like trying to find support to actually go through the Thinkorswim automated trading. That's what I've heard.
Javed, one more thing is some people use the Fibonacci channels and some people use pivots. What is the difference between the fibs and pivots and which is a better strategy?
Okay. Okay.
Javed, can you hear me?
Yep.
There's sometimes when in the morning or maybe in the beginning of the week, there's a gap up or gap down in certain ETFs or stocks. Can we go over that? What do those mean?
Okay.
Hi, Javed. My name is Asad.
Yeah.
Nice to meet you, by the way. I wanted to see if there's any way, it's a very basic question, if you could show how the candlestick chart really works. Because I haven't been able to figure out, like, why there are like those vertical lines, and what does that exactly show? I would really appreciate if you could go over on that in detail. Thank you.
Okay.
Javed, I have another quick one.
Yeah.
Why do you like 1600 candle?
That's a good question. That one I could probably hit.
Cool.
Javed, Assalamualaikum Javed, this is Munawar.
Walaikum salam.
At the end, can you cover a little bit about wheel strategy to automate what we're going to do? I am very serious about it. I want to dedicate one complete system on that. What are the prerequisites in order to start that?
That's a good question. We're going to have to do that on a separate call.
Yeah, separate call is very good. I understand, but I catch you now. That's why I'm raising this one. Let's schedule a separate for this wheel strategy, and we have to, like, I'm very serious. I'm looking for this. What are the prerequisites? Right now, TradingView has some promotion as well to use this Thanksgiving promotion. If we need any prerequisites like a subscription, something like that.
Okay, I'll cover the prerequisites maybe.
Okay, cover just prerequisites. Then we'll go in field strategy in separate call.
Okay, Sounds good.
Assalamu alaikum. Javed, I have a question for the speculative stocks. Like nowadays, the EVs are in very much hype. Can we really apply the technical analysis on that sort of stock, or should we just go with the news and leave the tea on that?
That's a good question. I wrote it down. I will address that.
Javed, Ahmad here. Just I guess the basic stuff for me is just around how can you predict maybe a range of stock movement for a given week, and how would that change if it was for a shorter term or longer term?
I'm going to cover that. Who was that, Ahmed?
Yes, Javed, yes.
Why do you want to know that?
So that I can do better with, because I hold a few ETFs and I kind of move in and out depending on how satisfied I am with performances. So just for me to maybe time things a little better.
Good. I'm going to cover that.
Javed, this is Rashid. So can we also touch base on like the time frame that would be like we need to look and analyze this?
Yes, I'm going to cover that.
Sorry, Brother Javed, this is Mohammed Durrani.
Yes.
Just a quick thing. With regards to IPOs, well, how do you determine their future growth or potential criteria to look into to determine whether it's worth investing or it's something to just wait and see kind of game?
Okay, I wrote it down, what you asked for.
Assalamualaikum, Javed. This is Zain. I just had a question that kind of piggyback off of the time frame question.
Yeah.
Just in terms of understanding, like, with measured moves, how to understand how much time it'll take for a measured move to play out as well.
That will be the first thing I cover then.
Okay. Thank you.
Okay, go keep going. Anything else? Okay, good. So we got a good number of people on the call. I will start with what Zain asked for, which is measured moves. Let's make sure that you can see my Thinkorswim. Here we go. Okay, can everybody see my chart?
Yes.
Okay.
Yes.
Great. Okay, let me clean it up. Let me get rid of my study. Okay, I like to start on the daily. Okay. So, measured moves. Let's start with my favorite chart patterns. I'm going to try to give you what I think is most effective and then move out from there. What I use all of the time. Some of this should be familiar to you because I try to talk about it whenever I give my predictions. So my favorite chart pattern is the V bottoms or the U bottoms. Anybody who knows me for any amount of time knows that that's what I look for. So how do you know it's a V bottom? You don't. So now everybody can leave the call. You only know that it's a V after the fact. But you don't have to wait till it's a full V. So I got excited in this pandemic around April 6th, right here. So this V had already bottomed. And what I saw around here was it wasn't going back. So because it could have gone back, but it didn't by a certain amount of time. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days. And then I was like, all right, we're actually going past the higher highs. So I was looking for a V bottom. Whenever I see a V bottom, there's a prediction. The first prediction is the neckline. This is called the neckline. This is where the V started. So the V ends where the V started. So I'm going to be a little haphazard about this. When you watch me do this, maybe on the 100th time, I'll be a little more organized in my explanation. But it all boils down to supply demand. Okay, everything boils down to supply demand. I didn't hit record, right? For everybody who's not here. Let me try to hit record. Record on, let me record to the cloud. Okay, so everything is supply and demand. Supply and demand is not a theory, it's a law. It is a law. It's like the law of the universe, supply and demand. Supply and demand has been around for a very long time, a long time before humans walked the earth. Any animal that needs to go find its food follows the laws of supply and demand. There's a scarcity of food. The animal kingdom goes and tries to find that scarce supply. They have a demand for it. That's why they go about their days to go find the food, go eat it, and reproduce and create the next generation of animals. So supply and demand is long before we have been around on this earth. It's a law. It's been around forever, since the beginning of time. So you must obey it. Everything follows supply and demand, especially the markets. The market is the purest form of capitalism. And if you can understand supply and demand, you understand where all the money is coming from and where it's going. The reason why a V bottom works is because of supply and demand. This is too much supply. Supply is greater than demand when you're in the downturn. So more sellers than buyers, okay? Buyers are demand, sellers are supply. So sellers are overtaking buyers. Now let's say we're down here after the bottom and I'm Fidelity or Wellington, Vanguard, Bridgewater, XCap from Billions. I want to buy 100 million shares. If I buy 100 million shares immediately, we're going to be like up here in a day. That's not healthy for me because I wanted to buy low, not buy high. And if I'm the reason why the market is high, I'm going to get fired by lunchtime. That's not going to work. So I need to go, if I have a lot of demand, 100 million shares of demand, I need to go where the supply is. What's the most obvious place that's supply? Right here. Okay, so all the buyers who are heavy buyers know they could at least buy up to here because everybody who bought here lost money. So they're all dying to break even here, 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 including the last sucker who bought at the top. He's dying to break even right here. He's dying to sell so he can make his money back. So there's guaranteed supply here. Okay. All the shorts also don't want to lose money. Short, 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 short in profit. All these shorts have stop losses at their break-even point. Again, easy supply to find. So anybody who has heavy demand out here knows they can find supply up to this level. That's why this is always the first target, the neckline. Okay? So if you are past the bottom, look for the neckline. The neckline is the top of the V right here. Okay. So let me show you this. This is a daily chart. So, you know, there was a lot of money to be made. If you're looking for the neckline down here, which I was, then there's 7,500 to 9,700. That's 1,200 points right to the neckline. Free money. Okay. Let's go intraday. People are used to minute charts. So I'll go on the minute chart. Okay. This was today, I think, or yeah, I think this was today. Great example. We're not even done yet, right? That's why I do these. Sometimes I just can't wait till the close, so I do it early. This is a U bottom. Beautiful. Okay, see the U being shaped here? Okay, where do we have to end up? The neckline. Where's the neckline? Right here. These computers are ridiculous sometimes. 12,173. It's like, you know, they don't even want to make it dirty. It's like exactly 12,173, right? That's the exact. Not 12,175. Should almost hit right here, but 12,173. Let me see. 12,173 was the high right here. Okay. So beautiful example. You buy anywhere here. If you see we're not hitting lower lows, we're moving to higher lows, aim for that. And we hit it. Let's look at another one. That was just now, right? Just this today. This is 9 o'clock open, 9:30 open right here. Boom. Whole day was reaching for basically finishing what we started yesterday. Okay, let's look again. This is a inverted U. Okay, right here. Rounded top. It's a rounded bottom. This is a rounded top. Neckline down here. 11,929. This is the top of the U. Then we hit the neckline again. Okay. Right here, V bottom, right? Obvious. So this is a little high. We didn't get there. Let's put it right here. And then we hit it right here. V. Okay. Should become obvious when you keep looking for these. This was really deep, but we struggled and made it right here. Okay, we made it right back to the top. Long struggle to finish this. This would also be called the inverted head and shoulders. Here's the head. Here's the two shoulders. Okay. Now, it gets better than that. That was just the neckline move. That one's the easy move. The measured move, which was asked about, is the ultimate prediction. If you could predict the measured move down here, you have a ton of money to make. Here's the measured move. You look at the neckline down to the head. Head to the neckline. So let's calculate 66.28 right here to 97.27. So 6,600 to 9,700. What is that? 1,100 points, right? So 1,100 points. The way you find the measured move is you double the distance from the head to the neckline. So 1,100 points up from here is 10,800.
Oh wait, it's 3,000.
What did I do wrong?
It's 3,000 points, no? 6,000 to.
I'm sure you're right. 3,000 points. 3,100 points? 3,100?
Yeah, 31, yeah.
That's my awesome math. 12,800? Yeah, we're not there yet. We're not there yet. 12,800. So we have not yet finished this measured move yet. We're still struggling for it. So 12,800. But, you know, if you asked anybody, what, 3,000 points? Actually, that was a very interesting discussion back then in June in the heart of the summer. And there was discussion specifically about getting 3,000 more points out of the NASDAQ. And many people thought we were crazy to predict that. But now we're sitting here in November by Thanksgiving and we're only, 600 points away, 700 points away. Actually, the high was only 300 and change away from 12,800. So that's the measured move off of this pandemic low. Now let's find another new measured move that we could get. This is
Sorry, Javed. Sorry.
Yeah, go ahead.
So you're saying, so we dropped 3,000, right? From whatever, 9,000 to 66, right? 3,000 points.
Yep.
So I missed you. So what is measured move? So now from 66, what is it? Can you
gotta double this move. Double this move.
Whatever you drop, you go double up.
Yeah, exactly. So we're still.
How do you know? So how do you know that it's coming? Like, what's the indicator that it's happening? Or so whenever you have a drop like that, it will go double up.
What it looks like, it has to be a V or a U.
So
this is a U. Yeah.
If you have this pattern, then it will be double move. Okay.
Yeah.
Okay.
Let's look at an intraday. Let's look at my favorite tick chart. Okay. Here's the V. 11.9 down to 11.8, 100 points, right? Did I do that right? 11.9 down to 11. Yeah, almost exactly 100 points. So it should be 12.1. 12.014. 100 points up from here. 12.014. Yeah, pretty much. So this was the V, and then we got it up here. 12.014. We consolidated and then kept going. Let's do another one. This is a bigger double bottom. Right here is a bottom. Here's a bottom. Okay, neckline of the double bottom is up here around 12,000. Bottom is 11.8. That's 200 points. 11.8 to 12,000. That's 200 points. Let's try it. Price level. Here's the bottom. Here's the neckline. Okay, this is 200 points right here. One bottom, two bottom. The measured move is double this move. Can I eyeball it? I could probably eyeball it, right? 12 to 11.8, 200 points. We're not there yet. Look for it. Look for it by Monday. We're not there yet.
Hey, Javed, I got a couple of questions. Jay
Yes, go ahead.
here. First time joiner. Been following you for a couple of months now in the chat groups. So is this applicable to any security that we're looking at, or is this the market as a whole?
It's most applicable to things that are sinusoidal, harmonic, that have a lot of liquidity, that are rhythmic, like the tides. So the broad market indices it'll work best for. Commodities, currencies. And when it's an individual stock, it's not as liquid. It has a lot of non-diversifiable risk. Has a lot of risk that is associated with. It has a lot of diversifiable risk in the name. So that's risk associated with the stock itself. You know, things like management, earnings.
Right.
No one company can affect the market. So the market moves like the pulse of the world commerce, you know, global commerce.
Got it.
Affects. Everybody's activities affects this NASDAQ 100. Everybody's daily activities, not their trading activities, just their daily going about your day affects this. But that's not the case for every stock. But if it's like a liquid stock that kind of trades like the market, let's look at Microsoft. Let's see if that one works. An example of a very liquid stock that feels like the market, then it should work for that. Here's a little bit of a U.
Right.
This is 210 down to 208, so you should get up to 212.
And then when we talk about getting to the end point, I guess when you double up, is there a specific time frame associated with that, or are we just saying as long as we hit that, we're good?
So yeah, Zane was asking about that. So who is this? Who asked that question?
It's me again, Jay again.
Okay, Jay. So let's go back to the most important question. So Jay, what you're asking me is, not only can we predict what'll happen in the future, but you're asking me to tell you when that'll happen in the future. So you want the price and you want the time.
Right.
The time it'll happen.
Mm-hmm.
Right. I'd say that is possible. And the way it is possible is because of this thing called symmetry. So right here, let's look at this double bottom again, right? Symmetry, you know, for those who don't know what symmetry means, I'm going to give you my definition of symmetry. It's probably a better definition out there, but it looks the same, right? It's mirror image. So when things look the same on the left side to the right side, then that's how you predict time, because this is a 1600 tick chart. Let's make it a 5-minute chart and see if we could do the same here. Kind of. Okay. So, and that's why I like 1600 tick, but to make the point, I put it on a 5-minute chart. So every increment on this 5-minute chart, the x-axis is incremented exactly the same, which is kind of important to figure out this prediction in time. If you have x-axis where all the increments periods are the same distance, and you have symmetry, then by definition, you will predict at what point in time something will happen. So let me give you an example specifically. This is the NQ on the 5-minute chart. This was Wednesday into Thursday. This is obviously, once you start looking for this, it always becomes obvious to you. So this is, a U bottom, right? Or a funny V, right? So right here is the U, all right? Neckline, head, bottom of the U. Okay. So if you say this is the middle, then this side, horizontal distance should equal this side. Wasn't exactly, but kind of, right? So let's say you started it here and got here, or you even started it here and got here. It should get there around there. It got there a little early, but you know what I'm saying, right? So that's symmetry. So if you measure from here to here, that's the amount of time it'll take in the future to get to the same level. Who asked that question again?
It was me, Jay. Yeah, I got
Jay,
you.
right?
I see what
Okay,
you're
so
doing.
that's
there.
one. Let me give you another one. Right here. This is extremely symmetric. Jay, you see this V?
Yep.
You see how symmetric that V is?
Yep.
Okay, so this is where the V started. This is the bottom of the V. Right here, we're hitting a higher low, higher low. We're failing to hit the bottom. That's kind of how you know we're forming the V, because we're not retesting for a double
Right.
bottom.
Right, for the double
Okay,
bottom, yep.
here is where you say, how long did this take? 305 to 2350 to 305, right? Overnight is not really good, but we'll do it anyway. 2350 to 305 is like 4 hours. 3 hours, right? Do it
Yep.
here. 3 hours. Okay, so let's go 3 hours here. 6 o'clock, right? Boom. So that's your crystal ball, right? A lot of people on this call are going to say that was just one instance. I could give you 1,000 of these, and I could give it to you every day.
No, that makes sense. There's a lot of symmetry. So that makes sense. Yep.
Yeah. And the reason why, let me give it to you from a supply-demand explanation, because supply-demand is a law, as I explained in the beginning. I'm Fidelity down here. I need to get done 1 million shares. I know that these guys are all going to sell to me because they're dying to break even, and all the shorts have stop losses, as I defined. If I push this faster than the shape of this, excuse me, if I try to do this in less than 3 hours, you can be guaranteed that we're going to be up here, because they will be scrambling to move away and give me higher and higher offers. And then I'm going to end up filling this up here. So I have to do it at the same pace, or I'm going to push the market. So machines are programmed to take it at the same angle and the same time to make the same shape, so that they can get the maximum number of shares offered to them without moving the market higher than this neckline. Does that make sense?
Absolute sense. Yeah, I got it.
It's
Thanks.
just a feel, right? They're pushing against the market. And if they see they're pushing too hard, they slow down. Okay? I'm Fidelity. Buy, wait, slow down. Buy, slow down. Buy, slow down. And so then they make the same pace. This channel looks the same, similar to this channel in time. Okay.
So do they dump the stock the same way as well too, when they're selling it or when it's at the peak, so to say?
So if you look at the dump here, it's very similar to the rise. Okay, let's start this rise again. Start this rise at 2140 and it finished at 2340 2 hours. So the dump should be 2 hours later. The dump finished at 3. It started at 12 midnight, finished at 3 o'clock. Yeah, and then it started at the rise started at around 9:40. So it took 2 hours 20 minutes to rise. No, 2 hours to rise, and it took 3 hours to dump. Similar though, right? Who asked that question?
Mohammed Durrani.
Yeah, so it took 2 hours to get up, 3 hours to go down.
So Javed, if I was looking at this, let's say at 3 o'clock, how would I know how can I kind of predict that this is the bottom now? Do you look at volumes as well,
No,
or
I never look at volumes. So you see how these are higher lows, and these are higher highs.
yeah?
If it's not obvious, hold on. It takes practice. That's the key. So this is as straight a channel as you're ever gonna find right here, but you have to see it. You have to be looking at these. That's the higher highs. Let me just draw the channel at once.
And these are 5-minute candles, right?
Yeah, I hate 5 minutes. It doesn't really, especially at night, but I'm just showing you for the symmetry. So you can use the horizontal axis. I don't like 5 minutes because what you get is a lot of sideways garbage, which doesn't mean that any volume actually, you know how I cut out volume? I do tick charts, right? So tick means every tick is a trade in tick charts. So this chart doesn't move unless there's trades. Each candle is 1,600 trades. That's why you're going to see a lot. You're going to see a lack of sideways, even in the middle of the night, because chart doesn't move unless there's trading going on. So you'll find the symmetry a lot cleaner on the tick charts. There's endless symmetry on these tick charts right here. Perfect symmetry. Left side looks exactly like the right side. Left side looks like the right side. Left side looks like the right side. You're not going to find that on the time charts because there's a lot of sideways BS where nothing actually happened, but candles were formed because candles have to be formed on the time chart because time is passing by. But on the tick charts, the candles only form when there's a trade. So it's much more symmetric than you'll find on the time chart. I only use the time chart for the daily, honestly speaking.
And tick charts are on all.
No,
Okay.
they're not even on Bloomberg really. Like they're very sparsely available on Bloomberg. I don't think Interactive Brokers has tick charts as far as I know. The only place I really find them in abundance is Thinkorswim. However, if you get access to tick data, like through Interactive Brokers, then you could create your own tick charts using Python or any other language, and packages like Plotly or Matplotlib. And it's very easy to take that tick data from something like Interactive Brokers for $14 a month or $10 a month and just pull it in and create your own tick charts, especially on historical. Yahoo doesn't have tick charts as far as I know. So one of the advantages of Thinkorswim is they're very good at tick charts. They let you customize your ticks. You can go in here in time frame, tick, type in the exact tick you want. If you hit custom, you could type it in right here. Sometimes I like 10,000 tick. It's a high number. Slows the chart down. Makes it a lot cleaner.
So what's the aggregation number that you put in?
10,000.
Yeah, what does that represent?
Oh, so each candle is 10,000 trades.
Oh, okay.
Has nothing to do with time. So I've taken the time out of the equation. See, this time doesn't match up. It's not the same time.
Mm-hmm.
See, it's totally off. So it shows you actual times where you hit those tick levels, but each candle represents only actual transactions. So I took out time out of the equation, makes the chart a lot more pure. So the chart only moves when there's actually something going on. It will happen in the, no, who said that? Ron, tell me a really illiquid stock. No, let's do time. Here's your dashes. See that? Liquid stocks always have a trade in them. Indices will always have a trade, even in the dead of night, right?
So what does the 1600 mean here?
It means that's how many trades went through to form the candle.
Okay, what is about 16? Okay.
1,600 trades happened to, and then the candle forms a new candle.
Okay.
Exactly. This candle. Exactly. That's it. So it tells you both. It tells you trades and price all in one candle. And here's the counter right here. See, it's counting? It's counting how many trades are going through. See, the candle is forming while the counter is counting. 275 trades, 290 trades. And this candle moves up and down just like it does on a minute. It's slower now because we're in the aftermarket, but it moves up and down. See, there you go. See, it moves.
Javed, question.
Yep.
What does this, the pointed pin really tells you?
Which pointed pin? It tells you the number of trades.
So for example, if you see the very last red, yeah, that one I'm talking about.
Yep.
So it has two pins, so above and below. What does that really tell you?
No, this pin?
No.
It's not a. It's called a wick. It's called a wick.
Oh, that's a wick. Yeah, yeah.
Okay.
Yeah, the wick. I'm not going to get into the basics of candlesticks today because
sure,
there's endless information on that online. So basically, the wick means it went to a high, but it didn't close there. Okay, so it opened here. It went as high as that price. It went as low as this price, and this is the current price. Okay, that's what. But we're not going to go through that today because there's
Javed. Only tick chart. What is the like a standard you recommended to set it up tick charts? Can you show one time, please?
I like 1,600 tick. And the higher the better. The higher the better. 1,600.
So Javed, that was my question. Why 1,600? Why not another number?
I look for the highest number possible without being too slow. For me, that has been 1,600, but I even go higher than that. I'll go to 5,000. The higher you go, it's just like a higher time frame chart. Like when you look at a 4-hour chart, it's a lot smoother than a 5-minute chart.
Oh, it's smoother. So the higher, the smoother.
Yeah, okay. The higher the time frame, the more predictable it is. I mean, everybody here on the call is probably too fast to love the daily chart, but I love the daily chart. You know why I love the daily chart? Because this is how stupid the daily chart is. And I could be saying this for years. I have been saying this for years, but very few people actually want to believe it. This is how.
Sorry, what was the 1600, Javed? That's the time period?
Yeah, no, it's a tick period. Tick charts. We were talking about tick charts.
Okay, tick period.
Tick period. 1,600 is the tick period. This is how stupid the daily chart is, okay? It's really that dumb. And this is a pandemic year. They used to call this kangaroo market. Is it really a kangaroo market? I mean, give me a break. That's not a kangaroo market. It's a market that respects a channel that's been around for 7 months now. The same channel. Really, the daily chart is that simple. This is a pandemic year. When it's not a pandemic year, it's much easier than that.
But Javed, in September 7th, it now dropped, right? On September 7th, what happened? Or whatever.
So then the new channel is sideways. Hold on. Can I draw a channel? Hold on. So since then, we've been sideways.
Ah, okay. Look at that.
So you won't know it. You have to lose a lot of money. I encourage you to lose all this money right here. However, if you made money from, you're not going to make money here. Okay. Yeah, I was wrong here. I told people, hey, it's over. It wasn't. There was a lot of money to be lost. I was telling people maybe it was over here. This is me being stupid. You're never going to predict the bottom before the bottom, all right? It's not going to happen. You're just going to look stupid like me. So I was saying bottom, bottom, bottom. It didn't happen. Here's the bottom. Then I bought in heavily over here. After. I buy in after the bottom. I buy in when we have higher lows and higher highs. The beginning of the channel. I had no idea what the channel was going to be, but we have obeyed the channel from here to here this whole year. Okay, now here you got to lose a ton of money right here. 1, 2, 3. You got to lose money. However, this was the new lower low right down in here, right? So, okay, no more lower lows. No more lower lows after here. So now's your chance to make money. You could have made money going into the election. Still didn't get through the lower low during the election. It was election time. And now we're sideways. Where's the measured move? If you guys were paying attention, we've been here for 45 minutes. Where's the measured move? Looking at this daily chart.
Give me 1 second. I'll figure this out.
Okay.
It's 12,400 or 12,500, somewhere around there.
So that's the neckline. That's the neckline of this box.
Yeah. So what is the drop from 12,000, Javed?
So
the bottom.
So the bottom is the bottom. When we have a sideways move, it's well, you could call this a W, double bottom, W double bottom right here.
Mhm.
Here's the bottom. Here's the bottom. So it'll be from the neckline of the W down to the bottom of the W, and that
So
will be
it's
the double.
1,500, I think.
Yeah, this is yeah. So how much do we? Is that 1,600 points?
Approximately
10,
1,500
9,
points.
yeah, around 1,600. You're right.
Mhm.
That makes it nice and round to 14,000.
Right around.
So from bottom, it'll go 3,200. Is that what you're saying, Javed? Right?
So from here, it goes up to the top and it doubles this box right here. From the bottom of the W to the top of the W, it doubles this up top. This
That's
move.
very, very optimistic. My
Yeah.
God.
But
Really?
remember, it looked optimistic here too, right? Now let's see. This would be confluence if both numbers add up, okay? Confluence means you're getting the same number from two different measures. So what did we say this was? 97 down to 67. So that was 3,000 points. So we have to get to 12.8, right? So that's the first stop is 12.8. But this one's predicting an even bigger move past that to 14,000. That's where we're headed once. We coiled here. This is called a coil or consolidation or box. We're coiling to double this move. Now let's see in history if we do that kind of thing. This is a coil right here. Box, W bottom. We did this intraday on the 1,600 tick. Same security. 12,000, 11.8, that was 200 points. We're going to hit 12.2 right up here, right? By Friday or Monday. So this was real time. We did this all week, right? Thursday, Friday, Sunday, Monday, Tuesday, Wednesday, Thanksgiving, right? Right after Thanksgiving, from Thursday to Thursday, we have consolidated sideways in a W double bottom, and we're looking to do the measured move in 1 week's time. This is the same security 1,600 tick. Okay, let's check it again on another. Let's do the ES. Remember, all these indices move together. Okay, so they should look similar. Okay, here's another double bottom box from here to here.
What
So
day
30
is that? What
This
day
is ES. ES.
No, which day? What are the times?
Oh, sorry. So the day is 11:19 back here. 11:19.
Okay.
And up to Tuesday. So it was 11:23. So the
Okay.
distance is 35.80 down to 35.44. 35 points. So 35.80 plus 35 points is 36.15. 36.
35.82. What's the bottom?
35 points? 35 points up?
82.
I need 35
40.
points up from there.
35.82 to
15,
35.
right? 36.15, right?
Yeah, sounds right. 35.15. 36.15, yeah. Where is 36.15? Oh, yeah, look at that.
No,
We
I
went
don't-
past, it went
yeah,
past
we
it.
went past it though, so I don't like that. That
Oh,
was
really?
pretty dirty. Yeah, it should
Wow.
be. It should be kind of
Good,
exact.
looks good to me. If
And
you can
then
predict, that's fine to me. I mean, why not?
No, it should be more
what about
exact.
the duration? And the duration should be in the same timeline as well too?
It should be. It should be, especially on the tick charts. So this was 1, 2 day. What is this? Friday, Sunday, Monday, Tuesday. So 2 trading days. And this did it in 1. Sometimes it's faster, huh? So that was not as clean.
Seems like somebody got fired from Fidelity here.
Yeah, right. They moved the market. Yeah, it happens. There's some hype sometimes. You're
Maybe
right.
Maybe it was Trump.
Trump?
Maybe it was Trump. Maybe it was Trump saying, okay, I will leave.
I love it. Let me pull up another ticker to get some more action. Let's look at crude. Crude hasn't been that systematic lately. Not really helpful. It's just purely trending. How about gold?
Javed, one
Yes.
sec. You do this analysis for 5 days, 1600 tick charts, right? Always?
If I can get more days, I would love to put more days in here. Let me see if it'll give me more.
What is your standard? What is your recommendation?
I do like 5 days, 1600. Yeah, I do 5
5
days, 1600.
Okay.
Yeah. Okay, so interesting thing. Let me tell you something new in terms of prediction. This is perfectly symmetric V on gold, right? GC is gold. And it took the same amount of time. We can all see that. 7 o'clock. 3 o'clock to 7 o'clock was 7 o'clock to 11 o'clock, right? Okay, perfect timing. Half, same place, right? You predicted the future. Here's the problem. There was no measured move. Okay? When you don't get a measured move, you're screwed. Okay, what that means is the trend changed. All right? So look at this. Crop the bed, right? So when you measured move failed, so the uptrend is done.
So Javed bhai, when you say measured move, is it only talking about the head and shoulders, or is there any other indicator for
No, I'm not
measured
talking about head and shoulders. I'm talking about V's and U's. Rounded bottoms and V bottoms.
Yeah, but then you are doing the measurement, right? The twice and all that. That's what you call
That's
it
only
measurement,
for rounded bottoms and V bottoms, or rounded tops and V tops, or double bottoms, double top. Head and shoulders for sure. There's a measured move. Same thing, right? Let's say these are 2 shoulders, and this is the head. So same thing, right?
Yeah.
But see how it got rejected, and then we're in the downturn. So that's an early indication to look for the down. This was the first down. Again, all failed measured moves here. Can't get here. We trying to get to the neckline. Look at this. This was the neckline, right? Trying to get there, trying to buy. Can't get there. So these guys who wanted to buy are going to pull all their bids and buy much lower. Because why buy up here and push the market where it doesn't want to be? Buy it much cheaper. Right? All these guys who bought up here are sellers down here. Okay. So let's look at this measured movement.
Question for you. Sorry.
Go ahead.
Okay. So what I understood is, so just by looking at the V, okay, you look at the V and then you buy at the bottom, and then you wait till it goes up, and then it's going to go back down, and then you buy again at the bottom for the V. Is that what you're saying here?
Where here?
Yeah. So if you look at the V and you go to the and then go down like the I'm sorry, I'm not able to say it correctly. The bottom of the V would be there we go. Is that where you want to buy, and then let it go up, and then
I wouldn't be a buyer until we pass this.
I know, right? That's
We're
exactly
hitting lower lows, right? Lower lows, lower
lower
highs.
lows, right? So you want to buy it at low, and then you wait till it goes back
No,
up, and then you sell. No, okay.
No, hold on. Who asked that question? Who asked that?
Asad.
I missed the basics today, didn't I? Okay. So, trend. Everything I do is based on trend. So let's go back to the basics. A trend is defined as an uptrend, a downtrend, or a sideways trend. Okay, this is a sideways trend. This is an uptrend. This is obviously a downtrend. This is when we want to forget. Everybody lost a lot of money here. Downtrend, uptrend, sideways trend. Uptrend means higher lows, higher highs. You don't short in an uptrend. I've been saying don't short since April. Everybody knows that. I'm on record for that. I say, anybody who brings up shorts, I say, donate your money to a good charity because you'll be fleeced. You'll lose all your money in this pandemic rally. So uptrend, you don't short. Downtrend, you don't buy. Lower lows, lower highs. If you want to lose money, buy in the downtrend. Try to pick bottoms. You buy after the downtrend has moved into an uptrend, which is defined by higher lows, higher highs. So what you were suggesting to me is in a downtrend to try to put in bids. We are hitting lower lows and lower highs. You don't bid in here until you get higher highs and higher lows. A higher high would have to be above this. See, there's a lower high. And then, of course, we get lower lows.
Right.
You get what I'm saying?
Yes.
Don't try to catch bottoms. Wait till you're in an uptrend or at least a sideways trend. If you're in a sideways trend, like we are here, you can look for the bottoms of the sideways, but make sure you're not hitting lower lows off those bottoms. You have to see confirmed retest, right? This has to be confirmed. It wasn't, then everybody dumps. See how that works?
Yes.
Okay, good. Lower lows, lower highs. It's really kind of stupid if you get into the rhythm of it. We are in an uptrend on the market, right? And then we're in a sideways trend. But this is why everybody got super excited in the daily charts. Because we were sideways for so long since September. Since Labor Day, we've been sideways. Agonizing mother of all consolidations. This is called a consolidation in time. For everybody who would love to see us down here, I'm sorry, it's not going to happen. Okay? We have higher lows in this uptrend. And now we're going for, as soon as we break 12.4, we're going to have higher highs. Higher all-time highs. We already have higher all-time highs in every other broad market index, right? So we've broken this consolidation. By the way, if you haven't noticed the theme here, all the indices look exactly the same in terms of the shape of the chart. That's not coincidence. They trade together too. Everybody trades the indices together and against each other. So this shape is exactly the same as the NASDAQ, as the other indices, as the Dow. Okay, so downtrend, uptrend, sideways trend. Sideways trend is a rectangle. The measured move, the neckline is the top of the rectangle or the bottom of the rectangle. The measured move is double the rectangle. We just broke the top of this rectangle. And now we broke the U. Some people would call this a cup and handle right here. So we broke this U. The measured move on the ES is from 34.53 to 36.30. So we should double that. But more importantly, we're going to double this. And for all the disbelievers, let's do this call again when we hit that point. 3,230 to 35.80. We have 300 points, 350 points ahead of us on the ES for all the disbelievers in the room. Okay, and remember, we have to double this over months. Right here, the pandemic V. From 33.94 down to 21.74. We got to double that move over months, maybe next year.
So, can this be applied to individuals tickers also? Or
it won't look
this is
as
on-
good because individual tickers have the word I was looking for was idiosyncratic risk. They have this diversifiable risk that has nothing to do with like rhythm, sinusoidal motion, harmonic motion. They have to do with people and how they manage money, how they manage companies. If it's liquid, maybe, but even then, look at all these gaps, right? So they're dirty. It's really hard to find any kind of. That's why I don't trade individual names. They're not predictive. Right? This is one of the most liquid names in the world, IBM, right? How about Microsoft? It's pretty dirty. Here was the measured move, right? So this is the V bottom. 135 up to the neckline, 187. So there was a lot of money you could have made. Higher lows, higher highs. Same as the market, right? Could have looked at the market and figured out that we're doing that. So you're down here at 148. That's a lot of money to be made to get to 188 on such a liquid mega cap name. There's $1 trillion company. You're collecting $50 there, right? $40. That's just to the neckline. That was free money. So 188, 132, 50 points. So we should get to 230. Is that a coincidence? I didn't plan this today. This was not a planned example, but that's exactly 50 points.
Well, obviously, this logic wouldn't apply on Tesla, right? That's like a illogical stock, has its own mind.
Yeah, that's when you get in trouble, right?
But I've actually seen it work really well. I've been trading Tesla on the 1600 tick chart for mock trades.
Who is that? This
is Zain Lughmani. At the 1600 ticks, once I started looking at 5-day 1600 tick, it changed everything for me and slowed down the market a lot. And it made it a lot more predictable as well.
This is definitely smooth higher lows. Like for anybody who can't keep up with Tesla, higher lows, higher highs. This is a channel, right? Right here on the 1600. Very smooth channel. I'll draw the channel for you. Higher lows, higher highs.
And pretty much that kind of determines whether the market is going in a bullish or individual stock is going in a bullish trend or a bearish trend, right?
Exactly.
High lows, okay.
Exactly. Higher highs, higher lows. Very predictable. Look, I mean, it looked crazy, but it had some rhythm to it, right? It dipped here. So you saying, yeah, well, in the channel, it's very predictable for sure. It just keeps doing. So if you're sold on channel trading, then whenever it hits the bottom of the channel, believe it'll hit the top again. That's your prediction, right? You can project channels past where we are. Okay, you could do this on Thinkorswim. Let's draw it. Change right expansion settings. By the way, you could just write the code to expand this channel forward. Is one of these drawings an expanded channel? Maybe the regression channel will do it.
So is this a one standard deviation channel?
This one is just a manually drawn channel. This one, the one I have. The regression channel will have standard deviations, but let me just keep my channel that I drew.
Javed, Asad here again.
Yes.
So you said, okay. You said you can write a code and you can predict that. How are you going to write the code? Where are you going to write the code? You mean Python code? Or?
No, ThinkScript. I'm having trouble today with putting this one in. I don't know why, but here. Okay, so who was that? Who asked that? Asad?
That's correct. Yes.
Okay, so first of all, for linear regression, they already gave you the study, so it'll just draw it for you. It's drawing it for you while the candles are happening. Okay, and then you can have it go forward too. So here's the code. You click view source. There's the code. Then you can get this to go project further. Okay, and then it'll draw the code forward past here. Okay, and then if you hold the mouse or have it label in your code, have it label the future points, then you'll see at this time or that day, if you do a daily chart, then on the daily chart, when this projects forward in your code, then you could just have it nail each of these days. January 19th, January 4th, and then here's the bottoms, here's the tops. You can hold it there and see the number. So you could see the prices in the future. Then if you use symmetry, you can kind of see how long it'll take to get to those prices too. If it's taking the same pace, up, down, up, down, up, down, up, right? If it's taking the same distance on the time chart, same number of days. Let me show you something very interesting in terms of symmetry. NASDAQ 100, I think I wrote this in the groups when we were doing this downturn in October. Let me clear out all these drawings. How do I do this? Clear drawing set. Okay. Let me get rid of this too. Let me show you something very interesting in terms of symmetry. Symmetry can also happen in a number of days. Let's count the number of days of the September downturn. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. That was the lower low retest, 15 days. Now let's count the October downturn. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. So I had written in the group that I counted these days, and I said it like either here or here or here, that this was the same number of days. So look for something to happen. We could have retested down here. Look for another bottom. There's really no such thing as a triple bottom. So it didn't happen. We just got a higher low, and then we kept going for higher highs. But you know that happens. So another thing that happened during the whole pandemic run-up, which is also very interesting. Look at all the sell-offs. 1, 2, 3. 1, 2, 3. 1, 2, 3. 1, 2, 3. 1, 2, 3. 1, 2, 3, 4. 1, 2. 1, 2, 3, 4. 1, 2, 3. Right? It's very rhythmic. 2s, 3s, and 4s. And then 14. And this was a kangaroo year. Was it really a kangaroo year? Was it really as crazy as everybody makes it out to be? Probably not. Does this rally look very different from last year? Let me put this back to like 10 years. So, you know, this rally, does that look very different from this rally here? This rally and then this rally. Yeah, it's steeper. But is there much difference going on here than here? Consolidations, rally. We moved from here to here, went sideways, then did the measured move. Let's see. We started here, 58.50, went to 78, let's say 50. So that's 2,000 points. So 98.50, right? Didn't work? Maybe my math's off. 58.90 to, let's say right here, 76.90. 1,800?
Yes.
Yep. So this plus 1,800 is how much? 84.90? 84.90?
94.
94.90?
Yeah.
94.90. Where is 94.90? 94. Okay. Not bad. I mean, we went a little past it, but, you know, good enough for government work, right? And then crap the bed. So how about this measured move right here? So, oh yeah, that's what we did before, right? We were calculating that. So, you know, things seem very crazy when you're in the heart of it, like in the middle of all the action, but is it really that crazy? When you see these, and remember, this was built on supply demand. Fidelity would kind of get fired if they didn't do this the same way they did this, right? This was a really bad sell-off. People were really hurt by this 2018 end of year sell-off. But look how symmetric the rally was. Look how symmetric this V is, right? So, and look how symmetric in hindsight this V actually is. It's pretty symmetric. Even though this was crazy with the endless limit downs. Let's go back a little bit more. Okay.
Javed,
Yes.
it's good that you counted the candles for a downward like 1, 2, 3, 1, 2, 3. Is upward also the same symmetry of candles are there? Upward?
That's the way to think about stuff. I haven't looked, but maybe.
Yeah.
I wasn't as concerned about that, but that's a good way of thinking, you know? So you got to go beyond whatever you learned from anybody else. So that was good. That's a good way of thinking.
Okay.
I'm not sure, but maybe.
I will check it out myself. Okay,
Yeah, definitely. So an interesting thing here, you know, you'd be looking for some kind of follow through, right? Here's a bottom, double bottom retest, no follow through. And then you get the mother of all rallies after that, right? So when you get rejected, like you want to be a short, look for follow through on your shorts. If you're not getting follow through, don't hang out here. Don't pray until you're broke. Realize this is a rejection of your measured move. So look for the rally, you know, make some money. Stop looking for being right. Just accept what the market is. And by the way, if you don't see it already, all of these in history are all channels, okay? The daily chart is the stupidest chart to make money on. They're always channels. It's not just NQ. It's everything. It's ES. Okay, everything on the daily is just a channel. You'll always, going back decades, you'll find channels. Okay, if you don't believe me, you can get history going back, I think, 100 years on this for the SPX. Like all available. Okay, this is the SPX going back forever. Yep. It's a lot of data. Yep. 1946, World War II. Okay. So let's go back when I was born. I was born in the year 1976, 200th anniversary of America. This is Abbas's favorite, the SPX. This is since I've been around for almost half a century. And my entire life has been a life of channels. Right? Okay. And then as the computers came in, they became much cleaner. I mean, there were no computers really. There weren't a lot of computers in 87, but you know, the channels become cleaner as the computers come into the equation. Look, this was an era of computers. And, you know, terminals and automated quotes. You don't have to trade on the exchange anymore. Commissions came down. The market makers didn't control the market as much. Okay, so that's the SPX. Let's go to currencies. Currencies do trends like for very, very long time. This is the mother of all currency pairs, Euro USD. The sideways channel right here.
Javed bhai, so Asad here again. So you're making all these channels to see what?
The trend is your friend until it bends. You ever hear that expression from trend traders?
No.
The trend is your friend.
The trend is your friend. Okay.
Until it bends.
Until it bends. Okay.
So, you know, you're not going to get in here. But if you can get in anywhere in this channel, you have a lot of money to be made on the short. Get in anywhere here, you have a lot of money to be made on the long. You're trying to make money inside the channel.
Got it.
Inside the trend. You be long here, you be short anywhere here, right?
This is only for options, you know.
What? No, I just showed you on so many different securities. I showed
yeah,
you
you did, but like what I'm saying, so if you want to do it like intraday, you're not looking at trading, intraday trading.
You could trade intraday. It's the same exact chart, right?
Okay.
Intraday is the same chart. Here's the channel on the 1600 tick for the Euro USD.
Yeah. Got it. Thank you.
So you're always trading the channel all the time. You're trading the trend. But you think about the astronomical amount of money to be made in the broad market indices when you know early that you're in a channel and you're not giving up the channel. So, you know, this is like, can't even describe how much money was made from here to here. And then sideways. And then this is where the big money is going to be made when we double this rectangle. And then the real big money is made doubling this amount because we haven't gotten there yet. Okay, so still early days on a lot of these measured moves. All of them will happen. You want to see? Oh wait, I didn't give you the real big fun. This is where I'm going to end today. We've been here at we're hitting the past 1 hour already. So this is what you'll really appreciate. I'm going to kind of end on this one. So recessions, market crashes, bulls and bears market, bull and bear markets, right? So if you go back 20 years, okay, can I do this on a monthly? Will be cleaner. Monthly. Okay, here we go. Weekly might be better. Yeah, they don't like going back behind 2001, but that's all I need. 2001 peaked over here before the dot-com crash. Okay. And so it crashed down to here. And then what happened is, and if you look at the left side of this chart, it looks similar, you know, so it's a mountain right here. So we went back to the neckline, which was the all-time high on the S&P, back to the 2001 high on the S&P. And we peaked. We couldn't break it. And we went right back to the retest of the low. But here's where it gets fun. So this is a double bottom spanning, you know, if you go back here to the mid-90s, let's say 15 years, right? 8 plus 5, 13 years, let's say. Going back to 1995 on the left side of this chart. So this is a double bottom spanning over a decade. So we have to first go back to the neckline. So there's a lot of money to be made here. Okay. So anybody who was listening to me back in April, I looked at the old chart. I looked at the 2008 chart and I said, we're sitting here. We got a lot of this sideways to up to get back to the neckline, just like we did in 2008. But this is where it gets real fun. This is where I got it wrong back in 2013, 14. I was like, no way on this God's green earth are we going to go from 666 to 1500. That happened already by the time I was going to be wrong. So I was like, first of all, that was going to be hard, but we got there. Then I was like, there's no way that we're going to do this. 800 points again. It's way too far. Never in history did we cover that kind of traction to double the move. Sure enough, you take, 666 to 15, let's say 66, that's 900 points. And we got to do this. And it was really hard to believe we were going to do 900 points from 1500, but sure enough, here, and then that's where it would start going sideways, right here. But we did it. Right? That was the measured move. So it happens. It was really hard to believe that back here, but we finished the decade by doing that measured move. Now it's going to be very difficult for everybody to believe that this is an actual measured move that can happen. Let's take a look at this one. I don't know if we covered this one. Maybe we did. 2,400 to 2,900, 500 points. Boom. Yeah. Did we cover that one? I don't know if we covered that. That was a weekly chart. So this was measured move right here on the S&P. We did it right here. Now we're going to do this one. Trust me, it's going to happen. This move to here will happen over the next couple of months. Okay. So, and that shows you like recessions follow this pattern. This was, how many years? Going back to 95 to 2008. This was one mountain. Let me try to do this on a daily so you could see it a little better. I think if they let me go back. No, they don't like that as much. Wait, hold on. Max, let me try max. Then you could see the other mountain here back in 2001. Here. Oh, that's 80s. Here. Okay, good. So see, this is the back part of the mountain you couldn't see. We started back in 97 to start the dot-com boom. 97 up to 2000, 2001, peaked. Look how symmetric that is. This is so symmetric. This was the recession, the dot-com crash. That was the late 90s boom. Greenspan with the Greenspan put. Irrational exuberance. Right here. Everybody's making a heyday. Look how symmetric that is. Okay? That was 20 years ago. I lost a lot of money on options. Tech options. A lot of those tech companies do not exist today. The options I bought there. Some of them do. They're all like dark fiber network companies. Everything that was hot. The Teslas of that day. Then you look and we went back to the highs again in 2007, peaked, and then boom, went back to the similar lows. I can't really zoom, but here's the lows here around 600 to 700. And here were the lows in the dot-com crash right here, 600 to 700. Okay, similar retest of the lows. That was a decade low right there. And then we go right back to the highs, and then we double it up to here. Okay, and now it's our turn to do this again. Look how symmetric that is. All right, I'm going to leave you on that. That was 20 years of symmetry and, measured moves, double bottoms, double tops. So you have a lot to chew on. I know I didn't cover most of the topics, but this is how I do my trading, whether it's intraday, daily. This is where my targets come from. So there's a lot of people on this call. I'll be asking you in the coming days and weeks, what's the measured move? What's the target? What's the target for today? And let's see if it hits. Trust me, it will. Okay, you guys can hit me direct message if you have any questions. But have a good Thanksgiving holiday, and I'll see you guys.
Thank you, Javed. Awesome.
Thanks, Javed. Yeah.
Javed, it is really awesome, man. Thank you.
No worries.
It was really helpful, man.
Good knowledge.
Happy to help. Enjoy the holidays, guys.
You too.
Assalamu alaikum.
Happy holidays.